So welcome everybody to this afternoon's DFI webinar. I'm very happy to be joined today by Chris Zawonka from Masabi. And today we're going to be talking about digital upskilling for financial health and meaningful engagement. For those of you who don't know me, my name is Sarah Corley. I'm DFI's community manager, and I run the webinar series for DFI amongst other things. So I'm really pleased to see lots of new names and also some old names as well joining us for today's session. Just as a reminder, we do record our sessions, so we are going to be able to post it to our YouTube channel and share with everybody tomorrow. So should you drop off the call through poor internet, or should you really enjoy the session and want to share it with your colleagues, you're very welcome to do so. You'll see an inbox pop in for me tomorrow with the recording. Also, just to let you know, it's a webinar, so you are all on mute and we unfortunately can't see all your beautiful faces. However, you can communicate and ask your questions from the Q&A function, which you'll find at the bottom of the Zoom screen. Please post your questions in the Q&A, and you can chat to one another more informally using the chat function if you see a friend and you want to say hi to them. But we all love to get your questions in the Q&A function. That way it will help us manage them better. And also, if we don't get around to answering all of them, we can have a look at your questions and hopefully respond to some more in the email that we'll send you through with the recording. So very glad to have you all on board with me today, and I'm very excited and looking forward to the webinar. So without further ado, let me stop talking and hand over to our special guest. Over to you, Chris.
Thanks, Sarah, and hello, everyone. As it says on the screen, it's nice to meet you all, and I'll echo what Sarah said. I'm seeing some familiar names, and also heard from a number of you about joining today, so that's really a pleasure, and it's good to be connected with those of you I haven't intersected with yet. So thank you for the introduction, Sarah, and for the opportunity to share some thoughts today on what I think is a really timely and important topic. I've also been on a number of the DFI webinar series, and I think it's been a really great one for all of us working at home and working through the crazy year that 2020 has been so far, as a way of complementing the DFI courses that many of you are going through, and as a way of me and others in the sector broadening some knowledge. So thank you to everyone. I'll talk a little bit more introduction in a moment. Yeah, first to talk about the topic for today. So as Sarah said, the title of the webinar we planned is Digital Upskilling for Financial Health and Meaningful Engagement. So really important topics that I think are circled together around the sector in which I think most people on this call are working, digital financial services, financial institutions, especially in the context of financial inclusion. As we exchange today, I look forward to sharing some of my thoughts, hearing questions and thoughts from all of you on how efforts that combine finance and education and financial literacy can contribute to some of the pathways for innovation and broadening financial inclusion, and driving platform engagement, really thinking about impact outcomes that we're all trying to achieve beyond just access. It's been a decade or so of a lot of talk around access, and now, especially amid the COVID-19 pandemic and the vulnerability of lower income, underserved segments that many of our institutions serve, financial health and resilience are more important than ever, right? So yeah, here's some topics that I'll walk through today in terms of navigating some of the disparate points and bringing them together, and hopefully some ideas and maybe ways that we can continue forward. So first of all, discuss a little bit about the landscape of financial inclusion and that legacy of sort of driving access and increased outreach, and this need that I mentioned about financial health and holistic approaches that seek to drive a bit more than just access. At the core of what we'll talk about is the potential and current impact of skilling and financial education initiatives, And within that a little bit, we'll take a step back, and I'll just, cast a broader view on sort of the legacy of those initiatives over the past decade or so. They've largely been confined to the development sector and to initiatives around under monikers like capacity building and things like that. But now things are changing a bit, and I think I'm part of that. I think a lot of you are part of that, and I think it'll be exciting for us to chat as well about where upskilling sits among some of these new models and mandates for learning and trying to be holistic. I'll highlight some case studies and learnings across some segments, and really then hopefully in some interaction with you all, look at the way forward and factors that could catalyze and scale the impact that a lot of us in our institutions are trying to do. So about me, who's Chris? And I don't mean to dive into deep philosophy with that or anything, but a little bit about my background. So as Sarah said, I'm the founder of Mosabi. We're a fintech, edtech hybrid startup that some of you may have heard about. I'll tell you a little bit more later. Before that, first, so I have a bit of a different background in that I switched gears halfway through my career. I spent 10 years in the corporate sector with Deloitte, so one of the biggest names out there, and had over that time much immersion in financial services, but very much in the consumer and retail sectors of North America and Europe, originally from Minnesota. And then I switched tracks. I've spent the majority of the past decade immersed in financial inclusion in Africa, specifically sub-Saharan Africa. I did that by working with a microfinance network called Entrepreneur du Monde, which, as you might guess by the name, is a French network that builds and incubates microfinance banks across Africa, a lot of Francophone Africa, but also in Asia and Latin America as well. And I've also done a number of consulting project work over the years in technical assistance and innovation for financial inclusion and digital financial services. So throughout that stretch, partnerships, projects, I've worked with people like the World Bank, UNCDF, World Food Program, as well as a number of commercial banks, mobile network operators, fintechs. But kind of squarely in that nexus of all of those and in the microfinance world. So in addition to Mosabi, I also do consulting work with a group called Amarante that some of you may have heard of. It's a boutique consultancy specializing in digital financial services and innovation in frontier markets. So I'm part of a couple steering committees as well, the Financial Inclusion Forum Africa that a few of you I see on the call are affiliated with, and some communities of practice that I think you guys are all exposed to through DFI as well as part of continuing dialogue with this. And one of my other things that I like to throw in is that I also am a mentor for young African founders through the Westerwelle Foundation based out of Germany. And that's something I find really rewarding to do on the side. So my core focus for most of my time is with Mosabi, and with my team, we build and grow the Mosabi platform essentially to digitize business upskilling and financial education, making it scalable, taking approaches that I saw over the years in my career and digitizing and trying to bring opportunity and financial access to underserved populations through that mobile learning. So to step back and think about things overarching, what is financial health? I think every one of us has been exposed a lot to this term, especially this year, right? But there are some, different factors of context that go into it, right? I think knowledge and learning and skills is fundamental to financial health, but it really runs concurrent to a lot of other factors as well. In terms of baselines of knowledge that might be connected to it, educational pathways are so different in different countries and among different segments. And even among us on the call that have more of a focus in inclusive finance, there's everything up from, you know, refugee and displaced person financial products and initiatives to, you know, more mid-market segment SME finance. And we'll talk about a few of those different ones today. There's also, you know, informal versus formal. And I think, you know, one of the biggest things is that, again, to underscore this idea that I think financial inclusion and access have been the mantra for years. And now, to some extent, financial inclusion is taking the reins and taking over, I think, in a good way for being the driving focus of that conversation. First, a note about the lens for this discussion. So it does come to you today a bit skewed from my background, which is in, as I said, microfinance and field financial inclusion activities in sub-Saharan Africa. But these ideas and considerations for upskilling, greater financial literacy, financial health, are true not only in developing countries, but also in countries with very well-developed and mature financial markets. You know, it's statistics and studies that have been done are out there. I mean, in emerging countries, only, you know, half of adults are using formal financial services are considered financially literate and are measured to be so. But even in developed markets, only 30% of the people that have access to formal credit are considered financially literate in what that credit means and how to be responsible from it. So, but this lens of thinking about things through the emerging market context is just by virtue of me spending most of my past 5 years living and working primarily in West Africa, founding my company there, etc. But there are lots of applications to the broader financial sectors globally as well. So financial health, yeah, these I like this framework that you see on the screen. It's something that has been built in a sort of a guiding principle for UNCDF and their financial inclusion initiatives. And as they have prioritized financial health and started to build, you know, global initiatives off of it. So it's really thinking around, you know, building financial security around these pillars. And it's these pillars: spending, saving, borrowing, and planning, right? It's definitely not rocket science, but putting some framework thinking into it and thinking about how spending, you know, involves managing cash flow, spending to pay bills on time, spending less than income in order to have, you know, positive financial stability. For savings, it's yes, having access to a regular savings product where someone can do savings, but also having that savings be liquid, having some measure of financial buffer that somebody can save for a rainy day or for a crisis situation like we're undergoing right now. For borrowing, it's again that core access to low-cost credit, that there have been gains in the spread of access to credit and formal credit, but there's certainly a long way to go. But then there are the other ideas about that credit and about using it responsibly, making repayments on it, avoiding over-indebtedness, etc. And then in terms of planning, you know, the ability to budget and plan ahead, to cover for assets, to cover for shocks, to be ready for crises when things don't go to plan, and be able to build a plan for that. So it's, you know, it becomes a bit of a more complex issue once you start dissecting each one of these pillars. And of course, as I talk about these, the COVID-19 pandemic looms large over everything. These are, yeah, I mean, these are four foundational pillars for financial health that are, again, through this UNCDF framework. But there's also, of course, the very two important, you know, streams of connective tissue that run throughout. And that's, you know, incomes and being able to make money and have an activity that generates income. and of course making ends meet amid local shutdowns and depressed overall economic activity when there's just a lot less going on in the sector to drive business activity. And the other, undercurrent of threat is understanding, right? So the financial literacy, the knowledge base, and the experience applying these pillars of financial health and being able to make informed choices across the sector. So, given the lens that I talked about further, and of course, and as I said, probably almost everybody on this call are focused on the segments where, especially today, that financial stability and economic well-being is consistently and perhaps chronically at risk. So while each one of these topics is a pillar of good practices for financial health, if they're embraced, they're also, of course, the flip side where it's very much a risk factor that reflects vulnerability and risk if it's not achievable. And this goes, far and away, many times more applicable for low-income citizens and the MSME segments. So those who our institutions are serving, people who are hustling to build micro and small business activities, petty market traders, informal retailers, street food vendors, smallholder farmers. In some of our countries, especially in sub-Saharan Africa, it's 95% of economic activity. So it's all very interrelated, and especially for these segments. So for those segments where they have flexibility and autonomy that comes with non-salaried work, it of course comes with those risks of income volatility, uncertainty about future revenue, anxiety, stress about covering bills and spending, and even for basics like putting food on the table. And if there's uncertainty about spending, there certainly is at least as much uncertainty about saving, not to mention social protection, insurance, or having access or knowledge about building old age savings and things like that. So other things with the ebbs and flows of income, of course, it's hard to get credit then. Documentation or credit worthiness, like a credit reference file is often not there or insufficient to satisfy lenders. So whenever digital credit might be available and accessible, it's often at the sky-high interest rates that we all see in our markets. So yeah, I'll move on, and I want to talk about that. As I said, while there's still vast amounts of work to be done, gains in financial inclusion have opened up access. More and more people than ever have access to some formal financial products and to mobile money and things like this. But access alone, these risks that I just talked about, that access isn't enough to put a dent in these like core risks to financial health that we discussed. So, there's emerging new bodies of evidence that really do shine a light on potential benefits that these segments can capitalize on if they're exposed to and available to get accessible upskilling that can drive more meaningful engagement of financial services, of finance, of payment, of credit, of all of these pillars we talked about, but also of digital platforms that help fuel the better access to those pillars. And that's especially true, of course, for the underserved segments that are fueling the economic engines of our countries. So this is the question we're asking today, really, is how can that digital and financial literacy learning help drive financial health, build resilience so these segments can weather the storm, and fundamentally so they can make better decisions, more meaningfully engage with products and services, and really building then a virtuous cycle for resilience. And that's for the users as well as for providers and innovators like many of your companies that are trying to serve them. So first, a few words stepping into behavioral science. And I really enjoy reading the literature and research that's out there, because I think it so fundamentally underpins finance in the markets where we're working these days. And the graphic you see on the screen here is one that really resonates with me. It's by an institute at Duke University. And it talks about this, this gap between an individual's intention and their action. And understanding that gap and understanding how that person might have good intentions, have access to information, see that gap and want to cross it. Behavioral science tries to understand what will make them do it, like what is going on in people's brains, what can we provide them, if this is a good decision, people that they need to make, you know, what helps them make that leap. The problem is that even on the graphic on this page, this gap as it exists in the marketplace is not usually a small one. It's not usually one that someone can jump over or skip over or hop over or even leap over. It's often a chasm. And it really is something that is difficult for providers to dissect and deconstruct and figure out ways. It's much, much more than nudging someone to take a step across a small gap. In digital finance, we've fallen in love in recent years with the word nudge, but it really requires much, much more than a nudge. And this is why it does, because if we think about someone who, say, has an appointment with their financial advisor, or even thinking about you know, health-related decisions, an appointment with their dentist or a doctor, or something like this, there are so many crazy, chaotic distractions in daily life. And to try and cut through that clutter with a message that will nudge someone or prompt someone to actually cross that gap, that chasm from intention to action, is a Herculean exercise, because there are so many of these distractions. And the effort that's happened over the years in the financial sector has been one of financial literacy and information campaigns and nudges and booklets being distributed and things like that. And I really think this illustration is apt in that to truly get someone through behavioral science and through meaningful engagement with their life and understanding of it, to make that action, it has to be very dramatically cutting through the clutter and figuring out different ways to do it, because there's just too much out there. And now these next two pictures are ones that I took on the street. For those of you familiar with Ghana, it's Mokola Market, you know, one of the busiest places in central Accra. So thinking back to that graphic I just showed, with all the distractions of daily life, think about how much more dramatically exacerbated that is in a context like this. In other contexts in emerging markets, it's really, really difficult to cut through that clutter of daily life and get information to make a difference about people making decisions. And that's because real people in the real world are facing those crazy, chaotic street scenes I just showed. They're hyper-focused on the present. People are seeing and touching things in person. That's what's most on their mind, is their daily life and things that they actually have to do in person and where they are. They're not thinking about the trade-offs of missing that financial advisor appointment, or of making some other decision that they probably should do and know they should do, but they don't understand probability, and they're forming all of their preferences at the moment. People essentially have very limited education. And what that all wraps together to cause is this really discouraging statistic on here that it came out of one of the most broad-ranging studies that was a few years ago, analyzing a litany of different financial education initiatives across many different markets. And it found that essentially the catalyst factor of that education in actually changing behavior by using content and using those initiatives was only 0.2%. 0.2%, and that's just not enough in order to, again, really cause people to get, you know, take the products or services you're offering, get the most value out of them, make those decisions and jump over those gaps. And and move forward to realities where they can then get value and be in better situations because of that. So, it's discouraging, but it's also, this is what I'm doing for a living. So I'm constantly thinking about this question here. How can we increase that? And how can we increase it dramatically? Otherwise, it's the definition of insanity, where we're just doing the same thing over and over. And how are we knowing that anything's ever going to work? And really, it's been interesting in that in addition to capturing these sort of frustrating numbers, there's also good research coming out in the last few years about how we can chip away at that. And there's a little bit out there now that's saying that, yes, just showering client bases or the citizen public with financial education materials or information campaigns is not effective, and it requires transcending in a way to then really think about efforts that are data-driven and putting the right information in front of the people at the right time when decisions need to be made, synchronized with their financial events and financial lives. And there are also other ways as well, like trying to get someone to save money, for instance. The far and away the best way to do that is through automatic savings options. Maybe some of you have that option with your bank to automatically draw down a set amount of savings every month. And default bias is this idea that people choose the very much choose the easiest pathway when they're faced with decisions, especially when they're faced with a lot of decisions, uncomfortable decisions about finance, and especially when there are many distractions out there. So I think we all then need to think about ways to dial in on those and have meaningful and realistic targets around that. So I want to talk for a second about the fact that these aren't new issues. And even before the advent of more innovative platforms and fintech innovation in the financial sector, there was this idea for decades about capacity building and seeing these gaps in educational pathways and skills and knowledge, and building things to address them. And there were largely field-based efforts that sought to, address perhaps undereducated audiences where many people had to leave formal schooling early and be thrust into commerce and income generating activity and faced with those decisions. So a lot of that activity did take the form of financial literacy campaigns, local community workshops, information dissemination, and a lot of it happened through government ministries, through NGOs, UN agencies, public sector. There was definitely some interesting innovation there. The group microfinance model that was pioneered decades ago took that on at some point, and the organization I worked for, Entrepreneur du Monde, had a really pioneer effort with social microfinance, where all of the financial products available to clients could only be accessed if they were taken in conjunction with social support services. And that often took the form of training that happened when people would go to community meetings to make microloans and payments and things like this. VSLA's village savings groups took similar approaches. But I think it was around about the time of course, around 5 years ago when the SDGs were announced and the 2030 agenda. I think a lot of these efforts needed to transform. And it was increasingly clear that there was limited capacity among these, broader public sector and development sector stakeholders to address the rapid pace of innovation that would need to be necessary to reach it. So I think a lot of these longstanding aid efforts are very interesting, and they were in effect pioneers in this idea of financial health and financial education for low-income people. In terms of refugees and displaced people, World Food Program with their cash transfer recipients, UNHCR, have been doing great things for many years and continue to produce great content and have direct access to populations to reinforce efforts. Some of the global NGOs and their village savings group models continue to do so, and of course the funders and and others in the sector. I think all of these stakeholders are now finding interesting roles as well as market-based solutions are emerging in terms of funding them, in terms of measuring and helping to get them to market. And my company Mosabi is working with a number of these on this page on that, in fact. So I want to talk for a second about new models of learning. So this is where I think some of these market-based solutions have explored ways to address those factors I talked about earlier, about how we can chip away at that 0.2% specter of a number that's out there. And there are a few ways that I see them doing it well. You know, that's in education and skilling efforts that do really have tangible direct links to resources and incentives. So a lot of times that's the financial products themselves. And I talked about this model with Entrepreneur du Monde, where it was sort of required for people to go through training and learn and workshop campaigns in order to access the financial products. It helps create an incentive cycle there where knowledge is absorbed and applied towards those financial products at the right time. There are also new emerging models for employability and preparedness for this condition that predominates of informal entrepreneurship and hustling to build business activities. The MasterCard Foundation has retooled its strategy in recent years, as many of you probably know, and now they're really hyper-focused on this idea of youth emerging from secondary education and building skills for that employability and for being entrepreneurs. So I think this cycle of incentives and resources involves really all stakeholders up and down the sector, but it's an encouraging trend that's helping to sustain some of these emerging innovations. And there's also, of course, an emerging sense, you know, this idea of even among these underserved populations, access to the technology skills that can help them leapfrog some of the knowledge barriers and access barriers to then start up their own solutions in technology and addressing some of the gaps in their communities. And there's an emerging world of accelerators and incubators that have been doing amazing things in sub-Saharan Africa in particular. I've been involved with MEST, Meltwater Entrepreneurial School of Technology, which has been educating underserved Africans, often with little formal education under their belts, to be tech entrepreneurs and to build their own companies. And some of them are becoming very, very successful. So I want to talk for a bit about some leading practices that are out there. And I'll take a moment here, maybe a few minutes, to walk through Mosabi. So what we're doing, what we're doing through Mosabi is we're, again, building a fintech edtech hybrid. And we're through mobile learning modules and gamified quizzing, the underserved segments that we target build financial and life skills. But in our model are also generating scoring profiles that we match to best fit financial providers and products that can be useful to them. So we're trying very concretely to address that cycle of incentives and sort of virtuous transformation for both users and providers that I talked about earlier. So we're squarely targeting these underserved segments, informal entrepreneurs, small business, MSMEs in emerging markets. And of course, there are these overarching risks right now, that over-indebtedness, productivity losses, anxieties, you know, lesser ability to deal with these shocks like the pandemic can affect large segments of economies. So what we're doing with Mosabi is we're building something the users can benefit from our lessons to make better decisions, apply improved behaviors around household and business finances. So it's topics like entrepreneurship and financial literacy, budgeting and bookkeeping, and sort of multi-channel access that we can be putting in citizens' pockets and helping them to choose and engage with responsible providers along the way. So Mosabi, we have a tried and tested smartphone app, and we've recently deployed a couple of new channels, thinking that a multi-channel approach is the best way to bridge these pervasive last mile divides. So our newest channels are through iOS phones, which many of you have probably seen the techno phones that are focused on the low income segments and have exploded in popularity, cost about $15 US. And we've also recently deployed our chatbot interface. Mamo Mosabi is our persona for a digital financial coach that can be in everyone's pocket. So with Mosabi, when learners are going through content, they're seeing modules on entrepreneurship, financial literacy, managing money, also demystifying the digital resources of the partners that we work with. So the upskilling includes soft as well as hard skills. So it's things like mindset and motivation, but also those budgeting and bookkeeping. And users can hop among channels in major languages, but also in indigenous languages, which we think is also helping to address last mile gaps. So essentially, Mosabi learning is happening on two fronts. It's practical skills for our learners, but actionable data insights for our partners as well. So our model is to work with financial institutions and platform providers on a B2B model, and they subscribe to our service to license our content and our scoring models, as well as for lead generation. So we have a patented data science machine learning algorithm on this, turning engagement into scoring profiles on preparedness and risks, and we provide this to our partners via dashboards and open APIs. So our model with Mosabi is to responsibly vet affordable, inclusive providers, other local resources, and drive those behavior changes, but also the choice and informed choices that people can make. So overall, our partner platforms through Mosabi can create larger, more informed customer bases and reduce costs really too, to onboard and upskill them, see those decisions and behavior change, and get better, meaningful engagement and higher lifetime customer value, we hope. So that's Mosabi. So I want to talk for a moment about the way forward. I see a couple other interesting models that I wanted to share. So there really are ways that solutions in the wide variety of different contexts that our institutions have need to address different segments, right? I talked about refugee financial literacy and resilience that NGOs are doing, and even some of the emerging fintechs are doing this as well, helping train cash transfer recipients so that it's different than the old model of cash in an envelope, but really is becoming part of a graduation model where it's their first formal financial product that can then inform a pathway forward. Other solutions that are predominating are platform-based upskilling, so extensions of those nudges that we've talked about that have been going on for years, but having them drive more engagement within gig platforms for drivers, payment platforms, other things. I talked about youth employability and preparedness, and again, how MasterCard is really leading the charge on this in sub-Saharan Africa, chatbots, also scaling for SMEs. And the last thing I want to touch in is how there are newer sort of national, regional, and even pan-continental efforts for digital and financial education that are happening. I have a few links to these here, and I encourage you all to check them out. But there are emerging trends with national governments, in addition to national financial inclusion strategies, having national digital and financial education strategies. And if you want to read more about those, I can share links from AFI, the Alliance for Financial Inclusion, and the OECD. And there are some countries that are really leading the charge and doing best practices on that, like Mexico, Morocco, and Indonesia. And And BCAO, the West African Monetary Union, also has a really interesting initiative that's just recently launched. Yeah, in terms of the aid sector transforming to try and push forward these market solutions for financial health, Comic Relief and Jersey Overseas Aid have had this 4-year initiative that is right in the middle of it right now for a number of African countries, and is incubating this sort of access and knowledge building among the base of pyramid. And the last one is, so there's a program in South Africa called the South Africa Trade and Investment Hub, run by USAID and the local ministries, and it's seeking to boost trade and investment in and around the Southern Africa trading bloc, so the SADC countries, but more at the SME level. So it really is addressing multiple segments for a lot of these initiatives. And the thought is that there are so many, you know, mid-sized SMEs out there, perhaps agribusinesses or small-scale manufacturers or artisan collectives that could be doing exporting and cross-border trade. But there was a wide-ranging study a year or so ago where they said the biggest barrier to actually unlocking and catalyzing that was the skills and knowledge to understand financial resources that could catalyze that scale. So they have a very wide-ranging initiative they kicked off this year to try and address that, bring digital learning to a host of different countries in the bloc there. And that one's really interesting to track as well. So yeah, where next? I think partnerships are the way forward. I don't think everybody can do everything. So I do see a lot of instances sometimes where a platform or a financial institution might just say that, you know, well, financial education, we should do that. You know, but it's easy to slip into old habits of just putting information out there, not having it be data driven or thinking that you're an expert in that content. So I think partnerships are key to driving that sort of learning, driving it in a way that links with truly holistic lifelong learning that can drive this financial health, and doing it in a way that can provide more resilience amid this this crazy year and this crazy pandemic we're having. So I think there's a lot of potential, a lot of unexplored avenues for those partnerships, perhaps in all of your institutions. And yeah, I think I'll pause there, and in the time we have left, would love to hear some of your questions. And Sarah, perhaps we could engage some of those going forward. Thank you.
Great, thank you very much, Chris. I really enjoyed your presentation. It was kind of disheartening in some ways to learn how you know, driving that behavior change is quite difficult, and what we've done to date so far hasn't made too much traction. But I guess that's all part of this lifelong learning process, and at least there's new ideas and solutions that are coming out there. I see a lot of questions, some related to generally financial education and some Masabi. So I'm thinking we'll start with the general ones and then we'll move on to the Masabi ones.
Sure.
And I guess one of the questions that, you know, that sort of I had, and kind of connects with our first question as well, is responsibility is financial literacy, financial education. I mean, you talked about partnerships, and you've also sort of now, you know, named a lot of organizations. I mean, I guess ultimately you're saying, is it almost everyone's responsibility?
I think that is a good question. And I think the one that I've left out of that, and that we haven't really mentioned too, is, you know, is government, ministries of education and school and institutional learning environments. You know, is this just a lifelong learning issue, sort of adult skills that people are expected to learn? I know, you know, myself, I never learned financial education growing up. I never learned what I consider some of these core life and livelihood skills. It really was just figuring it out, you know, on my own. And maybe everyone on the call is sharing similar experiences, but I think that's changing a bit. And I think it's because people are asking the right questions and having that dialogue about responsibility in financial education. And I think it isn't just a single answer, as you kind of alluded to, Sarah. I think it really is cross-sectoral responsibility among a number of different stakeholders, you know, working together in the best ways they can. I mentioned the governments that are pioneering some of these national policies for financial education, financial literacy. And it really isn't that many governments out there that have put those together yet, but some of them that are leading the way are not necessarily building prescriptive curriculum that needs to be thinking that would be learning objectives and imparting them to institutions in the sector. But it's really good dialogue on an overarching level to inform the type of informed citizen public that governments want to see. They want to see stability in their financial sectors. They want to see public who are able to have responsible providers out there who are giving them information, make informed decisions from among them. And then of course the private sector providers are really who I focused on today, and that's talking about financial institutions, but also these emerging platforms that are getting more and more of a share of attention and interest when it comes to someone managing their finances. If they're using mobile money on their phone or an application or payment platform, like I myself am doing most days, it makes sense for partnerships with those platforms to help drive the sort of understanding as people are actually making those decisions, because that's really the one critical thing I've seen in all these this emerging research, is that the information just really needs to be very much linked with financial lives and provided at the right time, so that people are learning while they're doing, or at least before they're doing. Because if it's just put out there after they're having to make decisions, that's where that number gets so low, because it's people aren't engaging then in the correct way.
Thanks, Chris. And Natalie asked a really interesting question. How do we actually make interested in financial literacy? So, in her experience, it can be, quite a difficult and complex thing. So how do we make it more approachable, especially for the underserved?
Yeah, that's a great question. And I think it's another one that some innovators are chipping away at, and certainly with Mosabi, we're trying to make some gains in that regard. But I think these underserved segments that I've talked through, I harken back to some of my experience in the field when we had some community-based financial literacy campaigns, and we'd work with local communities and have segments that we'd air on the radio in local tribal languages in West Africa, have a roadshow of community events that really gathered local interest in terms of almost feeling like an election rally or something like that, and had role-playing sessions on stages where people were describing financial challenges or how to choose providers. So I think what I've found, and now what we try to build into Mosabi, is figuring out a way to make it so easily accessible and really bridge those last divides. So that means being available on multiple different channels where people can hear things on the radio, but also have audio and image, and even as we use like animated local language narrative videos that are teaching financial concepts in an allegorical way that's entertaining, that people want to watch in the same way that they go to apps on their phone to watch TV shows or movies and some of the streaming apps. So we think making it interesting and engaging and something that people want to reach for in their pocket is good. But I think also, Sarah, the other one there is having that information and learning being in the right place at the right time. And again, as people are going through challenging decisions and their own stories of managing their finances and their business, having relatable, contextualized information that reflects the realities they face in day-to-day life, and puts that learning and best practices there, and with examples and ways that they can practically apply when they have to do it, all tied together to make that more effective.
And like talking of interest, so we've talked about how we make consumers more interested in upskilling them. But one of my second questions, which Marcella's also asked, was, so how do we get FSPs, you know, the people who are providing the products, how do we get them interested in providing financial education products and services to their, and helping bridge that gap? Have you got examples of ways that maybe, you know, you can show that by increasing the education levels of your clients, it can boost their financial gain?
Well, and I think that's a key to it, is how to make financial education and upskilling part of operational strategies rather than a corporate social responsibility or a social impact budget item. I think that's the legacy and that's the history of where financial institutions put budgets towards financial education, right? So that's something certainly with Masabi, we're trying to innovate in terms of the content and making it engaging and entertaining and using different channels, but we're also trying to innovate on that business model by really creating a product and a platform that's underpinned by data, by harnessing engagement analytics and making that actionable to inform business decisions. And the way we've, you know, chosen to do that, as I said, is in building the engagement and other alternative data and learner progress information that we collect, and transforming it into scoring that institutions can build into their credit decisioning and financial product operational decisions. So I think that's a big way, is a mindset shift. No matter the platform or sort of campaign that might be used for upskilling and education, thinking about it as an operational lever that can drive efficiency, that can reduce costs. Because if clients are more informed, if they're making more responsible choices, they don't churn as often. They are more stable and frequent with their repayments on credit products. They're more knowledgeable in terms of being, you know, knowing the value and being exposed to other financial products. So cross-selling is more of a viable option other than sort of, you know, one product or debt-only clients. So I think that mindset shift to thinking about ways to truly build it into strategy and operations are critical to that aspect.
So to see it as not just an additional expense, but actually do you see it as an essential step that will reap you the rewards, basically?
I think so, and I think that's not there yet in a lot of institutions. I would love to hear from some of you on the call. I know we're close to the end of the time slot, but if you have examples where your institutions have built budgets and strategies for financial education, financial literacy into your operations rather than into your social and community impact budgets, I'd love to hear more examples of that. There are institutions that are making that leap, but it's a big culture change right now.
And we've got Nicholas and Peter, who are both interested in insurance. So Nicholas is asking whether Masabi has information and modules on insurance, but also whether it might be considered a fifth pillar of financial health. And Peter also wanting to know whether actually you have any insurance clients who are using your Masabi products.
Yeah, that's a great question, and I think it's I think insurance is one of these next bigger frontiers, right? Where we still have a long way to go to get you know, uptake and adoption and engagement with insurance products to the level that they are with other products in the industry. And I think that's just a nature of the cycles, and it's coming. But I do think knowledge about what insurance is and what the value of it is going to be a big catalyst that can help drive that. So with Masabi, we have had pilots with a microinsurance provider. So we've provided information, for instance, about crop insurance to smallholder farmers, about asset insurance for gig workers who are doing motorbike or car driving platforms, things like that. And I think, but I think, you know, we've only scratched the surface of it with some some small steps so far. And I think more broadly, the sector is certainly in that phase as well. So I look forward to seeing where that can go, and if there are some, insurance innovators out there that that can help work with us and others to lead the charge. It is a more difficult message and a more difficult behavioral science exercise to get the public to understand insurance. It's just not as present a product, right? And I think it's a challenge that we look forward to, and I think the sector should as well, because I talked about it as being embedded in one of those pillars, but perhaps that's a good point, that it should be its own pillar, because yeah, depending on a variety of different contexts, it can be critical to financial health.
I remember from one of our previous webinars from a month or two ago, one of the speakers said, nobody wakes up in the morning looking to buy insurance.
Yeah. I remember that one as well. Yeah. Yep.
Yeah. That quote stuck with me.
Yep. Exactly.
Yeah. So moving on to a couple of questions from Kathleen, who wants to know a little bit more about Masabi. So does the platform segment or tailor the modules by gender, or whether it's micro entrepreneurship or employed? And do you work directly with gig platforms?
Yes, yes to both of those questions. So yeah, we have we work on a model to deploy our learning to the clients of our partner institutions, where we're connecting our backend systems via APIs. So when a client logs in and we match them to the client record list of the institution we work with, they're seeing a custom learner journey. So oftentimes we work with that provider or bank or fintech to have like the first modules that people see be custom learning tailored to that platform or that product or service specifically. And some of the institutions we work with are for instance, women's rural savings groups. So the entire client base is women. We have a series of modules on overcoming gender barriers for informal sector women entrepreneurs, and even for making good financial decisions to avoid the tremendous risk of financial shock through prenatal care and pregnancy. So that's not something like that everyone will see right away if they log on to Masabi, but when we integrate with our partners, that's exactly what we do, is segment and tailor that learning journey to the products they're exposed to, and then think about others in the general public who might want to be exposed to them as well. And yeah, we're actually taking our first steps as a company outside of Africa right now with the program that UNCDF is running out of Malaysia. It's the Gig Economy Challenge. So we're launching with several gig platform providers there that are targeted at the B40 segment in Malaysia, which is the lower income segment, and providing them freelance income generating opportunities and other gig work like domestic work and odd job labor, things like that, and trying to reinforce the value of the platforms and also the stability of those worker finances through our learning.
That's great to hear. Diversifying over to another, fantastic.
Yeah, it's scary first steps, but it's fun.
And the last question that I'm going to ask, as we're almost out of time for the session today.
Yeah.
So if an institution wants to teach their clients using your curriculum on financial literacy, what do they do?
Feel free to give me a message here. My information's on the screen. I will send out the deck. I'd love to stay in touch with people. I mentioned a number of different sort of stakeholders that are leading the charge and are thought leaders in terms of the research and evidence that's emerging. And I'm a bit nerdy in terms of diving into all this emerging thoughtware. So I'm happy to share any of that and have further conversations with anyone. And I'd love to hear what you all are doing for these initiatives in your institutions as well.
Great. Thank you, Chris. Well, after sort of sending me a little bit down in the beginning of the conversation,
Yeah.
I'm not sure
Brought
what's
it back
happening.
up.
You've brought me right the way back up. I'm really excited to see that, you know, we're now, you know, what really sticks in my mind is, you know, giving the information at the right time at the right place, you know, so that it's available when people need it. That's when most people are more likely to take on board some of the concepts and ideas. But also the different way you've started
Definitely.
trying to shift the minds of, you know, those delivering financial products and services to clients, that actually, you know, it should be an important part of their operational processes,
Yeah.
not seen as like a sort of want of a better word, a bit of a charity exercise.
I would love for that to be the big takeaway. Is I know a lot of people out there in attendance are going through the DFI courses, and I've had many you know, colleagues in the sector that have gone through these great courses in the past. And as you guys take best practices on a lot of different subjects there, yeah, I'd love if you could also go back to your institutions with some new thinking and energy about building financial education and upskilling into operations.
And we're always talking about the importance of data and data-driven decision. Exactly your kind of approach.
Wonderful, yeah.
Do that. Well, thank you so much, Chris. I've had an amazing hour. I feel like I've learned a lot. I'm really inspired by what you've shared with us today. And I thank all the attendees that have been on the line with us as well through the webinar. I hope you've all enjoyed it. And I'll be sending you Chris's slides and also the recording from the session tomorrow as well, for you to share with others in your networks too. Maybe the team who make the operational decisions, so we putting some budget in there for products such as Masabi. Thank you. Have a wonderful afternoon, evening, day, and I will see you in a webinar again soon.
Thank you, everybody.